Hello, traders. FX Pip Collector here. Today is Thursday, and it is February 13th. And this is my morning video where we take a look at the US dollar pairs, including gold, and we also take a look at a couple of the JPY pairs. If you haven't done so already, definitely join my free Discord trading community. The link is at the end of this video in the corner and in the description of the video. If you'd like to check out my membership program, then you get all the benefits listed below and more by signing up at my website, fxpipcollector.com. So first thing first, I always like to make it a habit to check the news first thing every morning. And we do have some pretty decent news coming out today. We got PPI news for the US dollar, and we got unemployment news coming out at 1:30 today. So some pretty good news events for sure. The dollar is kind of at a little bit of a critical point for me, and the dollar analysis is also extremely important because if I know what's going to happen on the dollar, I literally know what to do on every single one of these dollar pairs. I analyze the dollar index, and I do exactly what the dollar index tells me to do on every single one of these dollar pairs. And no, I am not looking at the DXY, I'm looking at the equally weighted US dollar index. So we have a couple options here. Now, option number one, which I'm almost starting to lean towards this as a more likely possibility, is that this is actually an A, B, C correction and that this is going to end up continuing back up and making a new high. The reason why I'm leaning towards this is because the other option is that this is a 1 and this is a 2 and it goes down in a big old wave 3. Wave 3 is supposed to be the biggest, strongest wave of a trend. So far, the dollar pairs and the dollar index have not made a big impulsive downtrend like a wave 3 should be. So if this does not maintain momentum and start pushing down pretty hard, probably today, then I think the idea of this being a wave 3 is going to be out the window. I think the idea is probably going to be that this move down is just a bear trap and it's probably just going to go up and end up looking like that. So we definitely need to keep an eye on these dollar pairs. We're at a pretty crucial point for sure right now. So moving on to the euro dollar. Euro dollar has been very, very strong, and the euro dollar is actually the only dollar pair I believe that has given us a break of structure to the upside. So we do have a possible wave one, we do have a possible wave two, and we do have this as possibly a one, two, three. Now, if this is a one, this is a two, and this is a three, then this needs to be a very strong wave. It needs to maintain momentum. If it doesn't maintain momentum, then the idea of this being a one, two, three needs to be thrown out because that's probably not what it is. There's definitely a chance that this ends up being a 1-2-3 pattern, like a 1-2-3 ABC correction to the last wave down, and it ends up pushing down again. So be very, very careful. There's no proof that the dollar is over yet. Now, going down to the 1 hour time frame, we're not at a Fibonacci retracement level. We don't have a break of structure to the downside, so I definitely would still recommend looking for longs. If it just keeps on making higher highs, higher lows, and keeps on pushing, then great. Keep on looking for longs. On the other hand, if it does end up going down, if it does break structure, I would definitely get out of my longs, and I would potentially even think about going short because at that point, it probably really is an A, it is a B, and it probably is a C, and it's probably just going to keep on going down. So pay very, very close attention to your structure. The euro dollar is actually the only one that tells me that maybe it is going to keep going up. All the other ones look like they could possibly keep going down. Moving on to the pound dollar. Now, the pound dollar, one thing we need to keep in mind is the pound dollar never broke structure. The trend is 100% still down. This could have already made a lower high. It could literally just keep on trending down very, very easily. So there is no break of structure up. The trend is definitely 100% down on the daily, the weekly, and the monthly on the pound dollar. Now going down to the 1 hour time frame, I got my Fibonacci retracement on this move down right here. I was hoping that this was an A, this was a B, and this was a C, and that this was just going to maintain momentum and just keep on trending up, giving us that break of structure. If it does keep on maintaining momentum, then it probably is a wave three. If it gives us that break of structure on the daily time frame, then it probably is a trend reversal on the higher time frames. But we are at the 78%. We definitely have a pretty impulsive move down. There is definitely a chance that this is going to turn into a bigger pattern and maybe even continue the downtrend. So if it does respect this 78.6, if it does end up pushing down, I personally would possibly even take it as a short. If it keeps on making higher highs, higher lows, then keep on holding on to your longs. You know, if it keeps on going up like that, then keep on looking for longs, keep on holding on to longs. But it definitely is trying to break down. And the trend is down on all the higher time frames, so the momentum is definitely down right now. And there probably is a pretty good chance that it does keep on going down. Moving on to the Aussie dollar. Like I said, the euro dollar is really the only one that has given us a break of structure telling us the trend is over, possibly. Aussie dollar, no break of structure. Tells me that the trend is down, momentum is down, and this possibly could end up pushing down again a long ways. It looks like a wave 5, but just because you see 5 waves does not mean that the trend is over. This could possibly be like a wave 6, and it could go down and make like a wave 7. The trend is not over until we get a break of structure on our roadmap higher time frames, which we definitely do not have yet. Going down to the 1 hour time frame, very sideways price action. If this really was the end of a wave 5 back here, I think that we would not be getting such sideways price action. I would expect to see it to go up and break structure. Now this right here hopefully is a correction to this last wave up right here. If it does make 3 waves down, if it makes it pulsive up, then hopefully it goes up and breaks structure. We need to see this break of structure to confirm that we have a turn on the much higher time frames. If we don't get this break of structure, we have to realize that the trend is down on the monthly, weekly, and daily, and that there is a chance that it just keeps going down. So be very careful in assuming that this is going to go up and break structure. It definitely does not have to. I'm hoping that it breaks structure because that would be a trend reversal on the much higher time frames and possibly a start of a huge move to the upside. But definitely no confirmation of that happening yet. Moving on to the Kiwi dollar, exactly the same analysis as the Aussie dollar. No break of structure, no reason to start looking for longs in a big way, in my opinion. It's literally exactly the same as the Aussie dollar, which is why I don't really analyze it much. Moving on to the US dollar CAD, big move to the downside, but the US dollar CAD has not been able to break structure either. I would like to see it break structure. That would confirm that this whole move up is over. But what I would like to happen and what really happens may be two different things. The fact that this is not broken structure tells me there is a chance that this thing pushes up in a big way, and it possibly could even go up and take out the previous highs. So until we get that break and hold below this structure, be careful assuming that these trends are complete, because they definitely haven't proven to be complete yet. Going down to the 1 hour time frame, we are definitely just completely sideways for about 1, 2, 3, 4, 5, 6 some odd days. So very sideways price action. I'm waiting for a break of structure to confirm that the higher time frame trend is over. It has not happened yet. The fact that it hasn't happened yet tells me that if it does end up breaking structure to the upside on these sort of time frames, you might want to think about going long again because there's definitely a chance that it pushes up. Until we get the turn on the higher time frames, we have to remember that the trend is up on all the higher time frames still. It definitely seems like it should break down, and I'm hoping that it breaks down, but so far there definitely has not been a break to the downside. Moving on to the US dollar Swiss, we had a big push down this morning because of the Swiss CPI news, not because of the dollar, because of the Swiss. If you look at all Swiss pairs, they all had that big push down this morning. Now, this push down could just be a cut into this last wave up. We got our Fibonacci retracement on there. I always look at any counter trend moves as nothing more than a possible cut into the last wave up. So if we see a Fibonacci bounce on shorter time frames, especially if we get a break to the upside on shorter time frames, I would take it as a long again. Moving down to the 1 hour time frame. On the 1 hour time frame, we got our Fibonacci retracement on the whole move up. As you can see, we got our fib from here to here. If this move down really is a crescent, then I would expect to see a breaking structure at one of these 3 Fibonacci levels. If it doesn't break structure but just keeps on pushing past all these Fib levels, then I would suggest looking for shorts on these sort of time frames. If you do get a nice Fibonacci bounce, a nice break of structure to the upside, then I would stop looking for shorts and I would start looking for longs again. Pretty simple. Pay attention to your Fib levels, pay attention to your structure levels, especially on the higher time frames, and hopefully you'll be trading in the right direction for sure. So let's move on to gold. Gold is definitely, without a doubt, still in an uptrend. As you can see, there's no break of structure, there's no lower high, there's no reason at all to say that this trend is over. My new target actually is the 261.8, which is right below the $3,000 an ounce area. So I do think there's a very good chance this is going to hit that $3,000 an ounce. Doesn't mean that it might not pull back. It just means to me that it's very likely to make a higher low, and just keep on trending up. So taking it down to the 1 hour time frame, I had a really nice long on gold yesterday. I went long right around here at the 61. I ended up getting out because I don't really trade gold that often. I got up here at the support level. It's still pushing up though. Yesterday I was saying that this possibly is an A, this is possibly a B. So if it does push up and then go down and break structure, it probably is a B, and it probably will push down like this. But you have to pay attention, because if it doesn't break structure, it might just keep on trending up. Especially with gold, you really need to be careful about assuming that it's going to go down and trying to get short. Gold is in a huge uptrend on the monthly, the weekly, the daily, the 4 hour. Gold is in an uptrend on literally every single higher time frame. So going down to any of these sort of time frames and thinking that you should go short is usually not a very good idea. But trying to go long at the end of pullbacks is definitely a good idea until the higher time frames tell you otherwise. Which, like I said, my new target on gold is right around $3,000 an ounce. So it definitely may just keep on trending up. It's actually probably pretty likely that it will just keep trending up. Moving on to the dollar yen, all the yen pairs definitely did make a pretty strong push up, but no breaker structure yet. If this really is the end of a wave B, then this will make a lower high and it will keep on going down. If it's not the end of a wave B, then it will break structure up, and if it does break structure up, I'll be more than happy to start looking for longs. Otherwise, I'm still looking for shorts. So moving down to the 1 hour time frame, I don't really think it's just going to keep drifting down from here. But if it does go up, if it does respect that 78% and then go down and then break structure, that would definitely be a short for me. On the other hand, if it doesn't do that, but instead it makes a higher low, it goes up, doesn't break structure, keeps on making higher highs, higher lows, then on these very short time frames, you could be looking for longs as long as the higher high, higher low series continues. If the higher high, higher low series breaks like this, or possibly it just keeps drifting down and breaks like that, then I would definitely start looking for shorts. So pay very close attention to your fib levels. Pay very close attention to your structure. Moving on to the euro yen. The euro yen did try to break, but it's actually rejecting structure. If it does not break and hold above structure, I'm still bearish. I'm still looking for shorts on sort of time frames. If it does break and hold above structure, then I'll definitely start looking for longs. I have no problem switching up my direction, but I do mainly just trade in one direction. And right now, I am mainly looking for shorts because the trend is technically still down. So going down to the 1 hour time frame, if it does go down, if it does break below structure, I'm going to go short again. I'm definitely looking for shorts. But on the other hand, like I said, if it breaks and holds above structure on the daily time frame, then at that point I'm going to become a buyer and I'm going to start looking for buys at the end of pullbacks. I don't really care what direction it goes. I just know right now that I'm bearish and I'm looking for shorts. So any break I see to the downside is a short for me. But if it breaks and holds to the upside on the higher time frames, that's a reversal. And once we get a reversal, I will switch it up and I'll become bullish, looking for longs at the end of three-way pullbacks. So moving on to the pound yen, back up to the daily time frame. Same thing on the pound yen. I mean, it is very strong to the upside, but it has not broken structure. Now, I definitely see the possibility that this is like a big 1, 2, 3 pattern and it does break structure and it goes up before it goes back down like that. Probably all still part of a wave B. But until the market proves that that's the case by breaking and holding above this structure, I'm still bearish. I still think there's a chance this could be the end of a wave B, and I think there's a chance it might just keep on pushing down. Until it breaks, I'm definitely still looking for shorts on shorter time frames. Back down to the 1 hour time frame, if this does go down, if it does break structure, I'll be more than happy to take it as another sorting opportunity, hopefully, for the continuation of the downtrend. On the other hand, just like on the euro yen, if it breaks and holds above structure and the daily holds above structure, at that point, I will definitely start looking for longs at the end of pullbacks. So the trend is my friend. If I get a trend reversal on the higher time frames, I will become bullish. If I don't get that trend reversal and I get a break to the downside on these shorter time frames, then I'm going to continue to be bearish and I'm going to continue to look for shorts. So kind of a crucial point on a lot of these dollar and yen pairs. We possibly could be in a reversal, but until the higher time frames tell me that this reversal is confirmed, I will definitely continue to trade with the trend on every single one of these pairs. I, for the most part, only trade in one direction, and that is the direction that the higher time frames tell me to trade in. So anyways, don't forget to join my free Discord trading community. And as always, thank you for watching and happy trading.